someone does not give a damn about investors on that platform right now.
I'm also not that surprised, to be honest.
If there is any event that would slow down the funding speed, I think we will see a lot of bad things happening to investors.
There have been signs.
They are sloppy in a lot of areas.
Not the most appealing lender profile.
Exactly, the expectations are at zero, right?
No, you mentioned it. We had management changes. We had the jurisdiction change.
You don't need 6 million to build a platform. So, like, where is the money?
They don't really care.
Was it from the beginning the plan, let's just raise free money and we will use it at our disposal?
We're in a market that, reminds of the time pre-COVID. Investors are very bullish.
Big problem is that people want to earn the highest yield and they often don't think it through.
This leaves you a bit scratching your head.
Unfortunately, in the P2P lending industry, many investors accept a lot of things, maybe too much.
Clearly, one of the worst platforms also in 25.
Welcome back to another video. Today, my guest is Denny from Rethink P2P. So we are doing a collaboration. We thought that it might be a good idea to highlight some of the events that happened in 2025. And we'll be also covering some of the questions from the community, giving you our thoughts on the platforms, and we'll wrap up the video with our expectations for 2026. All right. Thanks for joining me, Denny.
Yeah, sounds good. Thanks for the introduction, Jakub. Thanks, first of all, for initiating also this conversation. I'm very much looking forward to it. And I was also very pleased to see there was quite a good amount of engagement below the community post. So I feel like people are looking forward to this. So let's get them a good time.
We need to deliver now. There's a lot of pressure on us.
Pressure on us now.
All right. So let's talk about some of the events, or perhaps like, what are your thoughts on 2025 in terms of maybe best platforms, worst platforms, or best events, and maybe the most adverse events from your point of view?
Yeah, well, best platforms, I feel like that's always a matter of how you want to tackle this kind of angle. If it's only performance based, if you look at portfolio growth, maintaining a good portfolio quality, having a good communication transparency standard, I feel like there are many aspects that you could take into account. Personally, I would say every platform that was kind of delivering upon their promises in terms of, managing to get the returns that were promised or advertised in advance, platforms that honored their obligations towards investors, maybe liquidity-wise, no defaults, maybe improving a bit on recoveries. I feel like all the platforms that are delivered solid returns without any bigger issues can be accounted to the more better platforms of this year. Now, if we talk maybe return isolated, I can speak only for my portfolio, since I'm not exposed to all the different platforms that are in the market. For me personally, the best performing platforms are Nectaro, Afranga, Debitum, Income Marketplace, and I feel like also my Mintos bond investments perform quite well, all above 12-13%. I'm not sure if it's fair to point out singular platforms and highlight them. Maybe one platform I would consider worth mentioning on the positive side, on the very positive side, would be Nectaro for me. Looking at where they come from, second year of operations, I think they increased their portfolio from 3.5 million to about 20 million. 0% default rate. They integrated the auto invest feature, the group guarantee for Abelo Finance. They also have proven that they have a sense of humor. Looking at the additional interest you received, mocking.
Yeah, mocking Mintos. Yeah, I
mocking Mintos a bit. I feel like that shows also there's a sense of humor in there as well. So overall, I feel like they had a very round year. So I feel like they are one of a couple of platforms worth mentioning on the positive side for sure.
For me, what was interesting this year was Afranga with the relaunch, and especially in summer they had this 16% offer into stick credit loans, which I thought it was pretty good time to get into it. Now, of course, the interest dropped and there are some new lenders with not as great financials or not so much track record, so it's a different story. But yeah, Afranga for me was quite interesting this year. Yeah, Nectaro continues to perform quite well, although we need to pay attention a little bit about like what's going to happen in their new markets in the Philippines, and now with Abelo Finance, it's not so straightforward where your money is going into, so it's just something to consider maybe in 2026.
Aside from Afranga, Nectaro maybe, do you have any other platforms you feel like are worth mentioning on the positive side?
I mean, I think I agree with you that, as long as you don't screw over investors and deliver on the interest and repayments of principal, you're kind of okay, right? When it comes to platform development, offering like good interest rates and good product, yeah, I think Nectaro is definitely a contender here. Yeah, some of the older platforms, probably not so much this year. For example, Peerberry has not grown much, and loan availability has not been very great this year, so it's not really probably amongst the top. And yeah, I cannot think from top of my head which would be worth mentioning. Yeah, at least the ones that I'm invested in.
Yeah, but I agree with you. Also, maybe to reference again, Afranga, I feel like they have shown a successful transition now into a regulated marketplace. I'm not too sure about some of the overload of Bulgarian lenders, if that's really necessary, and to go into all of them in detail. But I agree, Stick Credit is definitely a flagship for obvious reasons, as probably most investors will know the background story. But yeah, overall, them together with Nectaro surely had the best, the most competitive returns also this year, good portfolio growth. So definitely see them among the best platforms this year.
Yeah. Okay, let's talk about bad news from 2025. For me personally, I think Asketit was like their move with moving to Croatia from Ireland. It was like the most negative move that I've noticed in the industry, amongst the platforms at least that I'm like actively monitoring. What do you think? Is this for you also the most negative news, or you have anything else?
Yeah, I would say Esketit and Estate Guru are the ones to name in this category. Esketit, to be honest, if you look at it a bit more, maybe we have some different insights to understand like how things are working maybe in the background. Esketit, it has been, I don't want to say a long way coming, but there have been signs. I feel like the exit of Avafin kind of left Esketit being, let's say, a marketplace for, young fintech startups, barely any track record, all the ventures of the both founders. Not the most appealing lender profile. You mentioned it. We had management changes. We had the jurisdiction change, which came a bit out of the blue and also into a not regulated environment. So this leaves you a bit scratching your head. And then obviously the consequences that come from it, limiting the liquidity for investors. I feel like overall it hasn't been a good year for Esketit at all. And to some extent, I'm also not that surprised, to be honest, because Esketit, we have discussed about this one time before, both of their founders. I met Mattis, when was it, 2019 in person. And I have always admired that, he has, so to say, he has the balls really like to speak out and talk like also sometimes some uncomfortable truths. And, he has this demeanor about himself of not giving a fuck when it comes to, bullshitting the regulator. And sorry if I'm cursing now, but, he wears his heart on his tongue. And in a way, I can relate to this, maybe from my personal background, but I feel like this kind of the tendency to be a bit arrogant is something that is now falling back to investors in terms of the behavior that is obviously driven by the shareholders. And from that angle, I'm not that surprised that, they do their thing. They don't really care. And I feel like the reason for their strong growth in the first years is now maybe one of the reasons why they struggle a bit more. But maybe you can share your view on this as well.
Yeah, I think I agree with you on this. Last year, like 2024, Esketit was like a great product. If you look at it from like an investor point of view, you still had the Avafin loans, which had a good track record in the industry, still be able to earn like above 10%, right? And then when Avafin dropped and change of management was announced, and then you got 7 days to kind of like, if you want to move your funds to the new entity, you can liquidate now and then we will block it. So they blocked like over 40 million of investors' funds, like just like that, right? So yeah, I agree. Like if I look at it like this, I mean, someone does not give a damn about investors on the platform right now. So yeah, it's unfortunate because I think Escated had really good liquidity tools, that could rival platforms like Go Grow and Monefit Smartsaver. You could earn higher returns and basically liquidate it within like 1 day, right? This is now a different story. So yeah, I don't know what's gonna happen with them for 2026. I think if they don't attract like proper loan originators, investors will probably think twice about investing there. I mean, since the last CEO left, I have zero communication really with the new management. And when I wanted to talk about some critical questions, they were interested in talking about future plans, which, if you don't resolve the issues for investors now, like what is there to talk about in the future, right? So yeah, I think I agree with you on this one. When it comes to estate gurus, it's really no news, right? There has been not much going on in the last 2 years.
The bar has already been very low.
Exactly, the expectations are at zero, right? So yeah, everybody is just hoping to get at least some of the funds back. Yeah, it's the second year in a row where they announced late expectations when it comes to recovery rates. They didn't deliver on it. What else is there to be said?
Yeah, I mean, I feel like their portfolio decreased by around 20 million this year, but the defaults remain pretty much on the same level, around between 130, 135 million. Default ratio of 60% is insane. I'm not sure how concerned investors at one point need to be in terms of their longevity, because I'm not sure with the volumes they have on a monthly basis. What is it? Maybe between 5 and 7 million.
Yeah, a few million, yeah.
They must have heavily reduced their overhead costs to work sustainably, to make the system continue to operate. I'm not really sure. I feel like you mentioned it, wasn't it for last year when they mentioned how much did they spend on recovery costs?
I think 1 million per year.
1 million per
year. It was 2024. I think they also said they will spend 1 million this year. Around that amount, yeah.
Considering this amount, investors might have expected a better result in terms of the recoveries. But yeah, you have to, I guess, just play the long game and hope for the best. But yeah, clearly one of the worst platforms also in 25.
It's interesting they still attract capital though, still like 6 to 8 million per month. I'm glad they are still around. The chances of recovering anything if they say, okay, we're closing down the platform is like zero, right? So at least something.
And I'm not sure to which extent EJ Grow is kind of finding any feedback in the market. I don't think there were any official numbers that have been communicated so far, but I would be curious to see if maybe they pick up some interest through this kind of product.
I read their blog post about this at some point. I just skimmed through it, and I think they praised it like a great product, like anything else. But I don't know either if investors are keen to earn 7% or something around that interest rate.
But there was no tangible numbers, right, in terms of attracted funds so far?
I cannot remember. I would need to look it up. Okay, so I think that's a good wrap up of 2025. I know the investors, they asked us to cover platforms where we don't have the same opinion, so they want to have some drama. Let's cover the platforms one by one. Perhaps we can start with VIAINVEST. You're invested on VIAINVEST, right? And I think you also spoke to their management a couple of times, so you might have a better understanding of what's going on. So what are your thoughts on VIAINVEST right now?
Right now, VIAINVEST for me, I don't know. I feel like the hiccups that have been seen for VIAINVEST in the past, for me, it's almost like part of the investing experience with VIAINVEST. So yeah, I have been personally invested since 2019. Obviously backed by VIASMS Group, a strong, big, established fintech player in the market, also offering different products, not just their peer-to-peer platform. Very good, solid financial situation. Yeah, and I feel like always for me a platform that I consider a bit like flying under the radar. Obviously they have their bugs and the user experience feels like hasn't changed a bit since the past 10 years since they launched. I mean, like competitive returns have, for a regulated platform that has obviously struggled a lot with the transition to become a regulated entity, which I believe will be one of your major critic points. And but yeah, overall, I have achieved double-digit returns every year. And looking at the entire setup, I feel like this is a good return for the risk that you get for investing on the platform.
I agree with you. Like, there's been no loss of capital for investors since they launched, right? So this is positive. Also, regulation is positive. Yeah, but I feel like they are sloppy in a lot of areas, like not just the website, how it looks like, but also while they were transitioning, they removed the buyback guarantee for their credit lines. And then it took like a year to repay the credit lines. And the communication around it, I found it like marketing without any clear solution, or it's not like honest. This is the issue we have. This is how we're working to resolve it. It has always been like some vague, and I know that I think during COVID, during the transition, when suddenly their funding volumes dropped, and then they were about like reaching out to all the influencers and be like, oh, like let's do collaboration. But before that, I've never heard about like them sharing some transparent information about their portfolio. Via SMS group, they didn't release the 2024 reports, and it's like end of 2025 now. So I feel like they're sloppy in so many different areas, which makes me like question what's their thinking about this, right? You have the Nectar and the Franga, who are platforms who try at least to like bring something new to the market, or something that's like competitive, right? I think VIAINVEST doesn't do it as long as they attract funds. So as long as they can fund their loan books, they're like, okay, we don't need to improve anything, and you can see it on the website, right? So it's just my point. My point there. We'll see. Maybe they will change something. Probably not, because they haven't changed anything in the last few years. But yeah,
I see the frustration, or like, let's say the angle where you're coming from. I feel like communication has never been a core strength of VIAINVEST, to put it this way, which, in times when there's very little turbulence, you almost don't notice anything about the platform, and it's just like as passive as it can be. I feel like you have to give credit. They have good loan availability. So I don't think I rarely had to, select loans manually. So there's always like enough loans in the background, competitive interest rates. Of course, when the shit hits the fan, you would wish to show more presence, to show more visibility, more communication. But as I said, for me, it's a little bit like the part of the investing experience with them. I understand people who don't like it for this regard, but overall, if you consider the track record they have, the backing that they have by VIASMS Group, and if you want to have some retro vibes and joining the bit like old fashioned user experience, like let's be fair. I'm not sure if you need any fancy UX design, and at the end of the day, I need a system that's running. It doesn't need to be pretty. It needs to deliver solid returns, and that's most important, I think.
Yeah, could be. Yeah. Although it would be also nice to have some financials about our individual lenders. There's nothing. I think the last financial report, they only released the group reports for 2023, so it's been a long time since they published anything. But yeah, for me personally, I think it's like you get to learn about platforms when the shit hits the fan, like you said, and then that's the point. Okay, so what are they gonna do now? Are they gonna be like honest and candid with investors, or are they gonna act like Estate Guru is acting, for example, So I think there's a lot of room for improvement, but like you said, the return is still double digit. But there is no major issues at the moment. So as long as it works, it works. Okay, so the next platform on the list is Fintown. I know you are currently not invested on Fintown, but you invested before. So what are your thoughts on Fintown right now?
Well, honestly, yes, I had a tryout experience with Fintown. I feel like it was 1,000, 2,000 euro, not much. To be fair, I feel like from the outside looking at it, they look like, a solid business, but I'm assuming you have more insights as to how they perform. Overall, I have to say, rental projects, development projects, everything that is like, collateral that is backed by real estate, I honestly don't feel so comfortable or confident in assessing those kind of loans. And, not just for the reasons that we saw with Estate Guru, where I'm also now exposed with, I feel like around 5,000 euro in loans and recovery. But in general, I feel like my strength in assessing lenders is consumer lending portfolios, seeing like which platforms can really like have a sustainable business model with small NPL ratios, solid financials. It's something I just feel more comfortable. And for this reason, I'm Fintown, but also the other platforms in the market. I don't really feel comfortable for those kind of platforms. And that's why my exposure, I would say, aside from Lande right now into those kind of projects is very little. So I can't really assess like how the platform is currently performing. But you are quite exposed quite heavily, I think, on Fintown, one of your biggest positions.
Yeah, I have like around 20K.
Why are you so confident?
I have not been increasing for the last like 3 months or so. I'm just holding my position because I think it's enough. But yeah, I'm mostly exposed to their rental projects. So when they launched, they had pretty good returns on rental. So they're refinancing the equity and paying you interest for it. For already operational rental properties in Prague, which I have visited, all of them, all of the ones that I'm invested in. So I think that's an interesting product, but there is a few things to consider right now. Fintown has been like the past half a year, 3/4 of the year, has been doing a more development loans because they need to develop properties. They don't have any other properties in their portfolio where they could like say, okay, we do rental, because the market in Prague is still like you need to find good properties to do that. It's not so easy. So with development projects, the investors face different risks, of course, right? I mean, Fintown or VIAINVEST group, the group backing the company who are in charge of the development, they're quite experienced in Prague, and I believe like they have some edge over maybe other smaller companies and some know-how. I think that's the most important thing here. So with the development projects, the investment is different. You need to wait longer to get your money back, and then you have all those risks connected to developments, right? Then you don't know how they're going to refinance it or if they will be able to sell those properties, etc., etc. If I would go by risk, I would say probably the rental projects are the least risky ones. Then you have the development projects, and then you have this, for example, the Seed, the project they have in Costa Rica, which I think is probably the highest risk because they just, it's an experiment for them to see how they will be able to develop something in Costa Rica, luxury apartments for tourists or expats or, and that kind of market. That project is quite big, the Seed. And they will need to make sure that their funds that are going to be generated through the pre-sales, which they will be targeting US customers, etc., that there is enough interest into that project so that they start getting money and repaying investors on Fintown, like interest and principal, etc. I would not look at Fintown like it's just like one small risk or one set of risks that I need to assess, but you need to look into what are those projects, what is being disclosed, and what is something that, I can justify the risk or not. And that's up to everybody's risk profile, right? But yeah, I think that they work with a lot of, so that's one thing to consider here. And another thing is that, which is positive so far, is that rental properties, the prices in Prague keep increasing and increasing every year. So that's attractive for refinancing purposes of their bigger projects that they have in Czech Republic. Of course, the risks in non-Czech market is higher, and should be considered for investors. Yeah, I know that they were teasing to become regulated already like a half a year ago. Nothing happened so far, so I reached out to them and asked like, okay, so what's the plan? And they were like, oh, we are still in the discussion about deciding how to do it. So that will be quite interesting to see if they get regulated and how, because currently they operate under this exemption. They have it from the National Bank, like a legal letter saying that they can operate without a crowdfunding license. When I was in Prague, they told me that if they wanted to become regulated, they would need to sell Fintown to like a third party, so there is no conflict of interest. And I don't think that would be necessarily the best for investors. I think that there might need to onboard other developers where they don't have insights into their finances and how they operate, etc. So yeah, I think it's okay. What could be improved? So yeah, we'll see what happens next year. Will be definitely interesting to see where Fintown goes. I think at the moment the growth has slowed down. So yeah, we'll see.
This is an interesting point that I would like to pick up. Because from my impression, you mentioned the new project in Costa Rica. You said it's quite big. Maybe you can also back this up with some numbers. But there's the Costa Rica project. Then there's most of the properties that are usually in Czech Republic are in Prague. Last time I checked, I think the portfolio was around 15, 16, 17 million, more or less. Where do you see the growth potential for them also going forward? And is there enough interest from investors as well?
It's a good question. I think, I don't know how much I can disclose, but at the moment, I know that they are looking into some projects to increase the portfolio. I know that the seed project in Costa Rica will need a lot of financing, for sure. Yeah, probably like tens of millions. I think they will need to kind of get the financing from the pre-sales that they're gonna generate as well, not just fund entirely through Fintown investors. So that's gonna be something where the portfolio will probably grow. In Czech Republic, I don't know at the moment whether there is enough opportunities that they are looking at and if there is anything feasible that they would even consider acquiring. From my understanding, they are quite picky when it comes to buying properties in Prague. And in the last year, we have seen them starting a construction. They have 2 ongoing construction projects, right? And they also bought land, which I think it was agricultural land, which they changed into like a building. They got all the building permits, so the value increased. So they were trying to probably to sell it. So they are looking at like various opportunities. Yeah. In Czech Republic, there is like the biggest issue is there to get the construction permits. It takes like 7 years. So that's a long time frame. And I know that sometimes they are looking into specific land plots that already have the construction permits. So that narrows down the availability of what's on the market, right? So yeah, it's a bit tricky to operate there or to build a lot of stuff in Czech Republic.
Do you see other geographies coming into the mix?
Possibly. Nothing has been confirmed officially. I cannot say really, but yeah, if there are other geographies, investors definitely need to look in more depth into it, whether it's worth the risks. And yeah, also it will be interesting to see how they will deal with like securitization and how they will present their risk mitigation strategies. So that's something to consider in the future.
And maybe one last aspect in this regard, what's your take on the quality of the VHRF group guarantee?
I talked about this with Maxims, the founder and CEO, when I was in Prague. And he said, if there is a situation where they lack the capital, they can sell their properties or they can sell units of the properties. So if they need to, get more funds to honor obligations to investors, there is always the option to sell like an apartment in Honest Carlin or in Říčany, So that's pretty interesting because it's a bit more flexible in that regard. So yeah, I think with the growing value of real estate in Prague, I think they're okay, but I'm not sure if they take on more debt. Like it would be nice to have more insights into like what's their current value of assets they have under management, etc. I think it will be probably mentioned in the report for 2025. So yeah, that's an interesting take to be able to sell specific units. We also discussed, they have those rental properties in a very central area of Prague where there is a high demand. And the value of the property since they acquired it increased substantially, I think. So there is possibility that, they might, maybe in the future, if they get a large enough offer, maybe to sell the entire project and decrease their debts. I don't know if that's on the table this year or in the near future, but there are possibilities.
Okay. But from your current risk assessment, you stay put or do you increase in 26?
So I think as we are recording this video, I will leave it the way it is. I don't know if there's going to be any more rental, or if there is going to be rental, probably just in very limited loan amounts. And yeah, I mean, I think like 50 or 60% of the portfolio at the moment I can already withdraw if I wanted to. But the interest is double digit, like 12, 13%. So it's not really a reason to touch it at the moment. But yeah, I mean, it's like with the platform, sometimes you have those like good opportunities when they launch, because they want to get attractive. And then the opportunities or the interest, something changes. Like, it's always interesting. And also for the investors, I think, to monitor their platforms regularly and to reevaluate whether it's still worth the risk or not. Because like you can see, like on any platform, right? At some point it was good, and then maybe it was less good. Like we have seen, for example, on Esketit, like during this year. So yeah, something to consider for sure as an investor. Being fully passive and saying like I'm investing on this platform for 5 years into the same lenders is probably not even realistic.
Yep, I agree. Unless you're tied to a 5-year loan term without any liquidity possibility.
Yeah, I mean,
cash out before.
Yeah, then you can hope that they're gonna repay.
All right, shall we switch to the next platform?
Yeah, let's do, what do you want to do? Want to do Maclear?
Let's talk Debitum.
Let's talk Debitum, okay.
Let's have more opposing views.
Okay, yeah, Debitum. I'm not exposed, so I can say whatever I want. Investors should also know that we have both like different access to information, right? We made decisions based on information that we know or I don't know. So perhaps you can let me know what's your take on the platform or where you are investing specifically.
Yeah, I mean, I feel like the center of the debate for us is more the assessment of basically the origin story. Because, I mean, I can talk about the different lenders of Debitum, and I feel like ultimately what is one of the key, I mean, you're the better person to tell, but I feel like the biggest debate surrounding Debitum is basically the origin story, this token generation event, and this, kind of the feeling of, has the foundation of the platform, has it been built up based on some shady moves? I'm not sure to which extent we should give some background story now to the listeners in terms of like what this whole token generation event was about, or if we want to just break it down to the core.
All right, so the origin story of Debitum, back then it was called Debitum Network, was that they raised funds from crypto depositors or crypto investors through the token generation event. So those people who invested in to Debitum Network will get some value or benefits, which was described in the white paper, which you can still look up, by the way. Yeah, so they raised several millions in Ethereum at the time of the token generation event. And then suddenly Ethereum started dropping. So the management of the Debitum Network decided to, okay, let's liquidate it, let's transfer it into fiat money. In the end, they got like 6 or 7 million euro out of it, which they said, okay, we're going to use these funds to build a platform, right? To attract lenders, etc. So they had like this buffer of money. And the investors ultimately who made Debitum even possible, in the end, they didn't get any value whatsoever. Martin Liberts sold Debitum to the new management 2 years ago. And the new management decided they are not responsible for the Deb token. So yeah, that's the long story short. In my view, it's I've read your commentary about this on your blog. In my view, I would say that if there would not be the initial backers, Debitum would not exist. I know that they used like various entities for the token generation event. It's not really transparent or clearly disclosed. Debitum, as of today, is based in Latvia under I don't know, the third or fourth entity since the launch. I'm not sure. I lost track of it. So yeah, now they are regulated in Latvia as an investment from brokerage license. And yeah, that's what kind of happened. What's your thought on this?
Yeah, you're right. With the initial token generation event they had, I feel like, they were still registered in Lithuania, where the crowd sale also took place. I feel like it was something with Prosperity, something like this.
Yeah,
but I agree.
True.
I agree. It wasn't really clear like where the money flows to which entity, so that was overall not very comprehensive, maybe to call it like this. Overall, I have to say, I can see both sides. I mean, I haven't been committed or invested into this crowd sale, this token generation event. I understand the frustration because obviously the backers, the investors of those tokens, I feel like they sold like around 400 DEP token back then, which are then converted, as you mentioned. I feel like, they ultimately wanted to have some value from it, wanted to see that the value of the token increases so they can get ultimately some return. And the question is, how do you apply this in what was meant to be a decentralized SME lending platform that was also, and that was shown in the white paper, like they wanted to connect the blockchain elements, which then turned out the transaction costs are too high. On the other side, they were always very clear that the business model is based on fiat currency. So I'm not sure how you can read it from different angles, and you can tell, like, did they make a genuine approach to kind of connect both worlds with each other? Did they try to, generate some value for the DEP token then to increase? I mean, the utility, as far as I can remember back then, you were able to get your interest payments in DEP token. There was an exchange place from DEP token to euro and vice versa. I remember if you had a certain amount of DEP token, you were also able to sell your loan prior maturity. So there were a couple of functionalities, but I'm not too closely involved to say like what actually creates the benefit for those kind of tokens to generate the value that would satisfy investors. Was Martins Liebertz using those kind of, this kind of opportunity, this coin raising to ultimately just get the platform off the ground? I don't know. I can't tell.
So I talked to like some insiders that were involved with Debitum at the point of the launch, and from what I've heard is that actually on the inside the company there was never really talk about the crypto stuff. I know from what allegedly the management back then, they just wanted to copy Mintos, do the same business model. Yeah, so which raises the question, was there even a legitimate plan to do anything with crypto, or was from the beginning the plan, let's just raise free money and we will use it at our disposal, right? So that's one question. The other question is, you don't need 6 million to build a platform like Debitum or Debitum network, So like, okay, where is the money? Where is the rest? That's also something that has never been addressed. So yeah, I mean, it's up in the air. Investors can decide whether they base their decisions on it or not. As of right now, there is no DEP token, nothing. I mean, one of the aspects also to consider is that the crypto community didn't push back enough to do anything with it. So there was also really little interest. So it looks like the people who raised those funds got with free money, which was then build a company and then sold it to other shareholders.
Yeah. I would maybe add 2 points, because you're right. When I feel like Martins, like Schulte and Liebertz, they know each other from Latvia. I think like they shared the same background in university, or they attended the same school or whatever. And it's true, like Martins and also the initial founders of Debitum, they were having a background in consumer lending, particular in SME lending. Debifo, if you recall, also one of the first lenders I think that was present on Mintos back in the day. So yeah, he had this idea to set up this marketplace, which was kind of like Mintos, but more focused for SMEs, for small and medium-sized companies. I feel like with the investors, I understand the frustration, but I feel like to an extent, the reason so much money was raised back in the day is also, I don't think investors were really looking at whatever Debitum wanted to establish. I also believe in parts it was just like following, let's say, the hype train, Bitcoin at the end of 2017 when they had their first ride, I feel like towards 18,000 US dollars per Bitcoin. And it was exactly in that time when they raised this token generation event. This was, I feel like, the end of 17, beginning of 18. So I feel like many investors back then, they were just like greedy to an extent, I would argue, and just like they didn't really care maybe what was about to happen in the background. Maybe I have to first make a statement. I'm not the lawyer of Debitum. I'm not here to defend anything from what happened back then, but I'm just trying to give my perspective. I feel like most investors were like in this gold rush environment or Wild West scenario back in the day. They just wanted to earn a quick buck. Maybe Martins has exposed this kind of, mentality or this kind of need for earning quick funds back in the day. It has been Lithuania has been a big industry for those kind of events and ICOs back in the day. I think it was, if I recall correctly, 2017, only the USA and China had more ICOs and higher volumes in terms of attracted funds. And then in third comes already Lithuania. So I feel like there was in general an atmosphere, an environment that got people very excited. Maybe some took advantage of it. I don't know. I'm not too big into this kind of crypto topic anyway, so I can't tell like how many platforms from back then still exist. But it was certainly a unique opportunity for many companies to raise funds. Whether they had honorable and genuine intentions or not is up to debate. That's, I feel like, everybody that can make up their mind about the situation.
It's a history, and it seems like nobody cares today anyway.
But I agree. It's a story that has to be taken into account, that people need to reflect on. But, also like, as you mentioned, like, where has the money gone? What has been used for platform development, for marketing tools, for, whatever the case may be, who benefited at the end of the day? Where did the funds go? The question for me is where do you draw the line now also with let's say the new owners? The new ownership, new legal entities, do you feel like there's still accountability for this kind of ICO legacy? Because from my experience, it seems like you're very much like trying to make this brand very visible, or like to give them the stamp very visible, to be aware of a situation that maybe new owners can't be held accountable for.
I'm not really I don't collaborate with Debitum in any capacity. So, if people want to invest there, they can invest. I would probably encourage them to do a deep dive into their current situation on Debitum. And if they think it matches the risk profile, they can, everybody is up to invest into anything. Yeah. Should there be responsibility? I mean, you cannot be responsible for other people in the past, right? At the same time, when you buy a business, that's, if you have done your due diligence, they got their report, their audited report from like a company saying, oh, everything is fine. But yeah, it's a business risk that you take on when you acquire a company that you want to grow and continue operating, right? I mean, the management changes on Debitum like every half a year now. The new ownership is also changed again, right?
Really, like, one shareholder dropped out. He sold his shares, but
exactly,
it's not completely new owners in charge.
Yeah, but right now, like, I don't know how familiar you are with the current lenders, but it's basically like a very tight cluster of companies in the forest business, right? In Latvia, you have two loan originators, Evergreen and Triple Dragon, who are like outside, but the rest is interconnected companies with overlap in management. So yeah, there are definitely risks to consider from a retail investor's perspective.
Well, if you talk about sandbox funding, I feel like this is something that I also explored a bit more in detail in one of my publications this year, to understand, like, from the outside looking at it, it appears to be a black box, and you don't have any particular insights which kind of projects are being funded. But it's a bit like, to understand the design maybe of sandbox funding, to, that companies that need quick access for funds, where you need to act fast in the market when opportunities arise, and, going through all the regulatory route, setting up the prospectus, you leave out options on the table. So to have a tool to facilitate, I feel like it's always like each prospectus is up to 8 million, I think, and to have then a number of companies in the back that you can fund then immediately via this vehicle. There's, as you said, there's pros and cons that you need to weigh up. But I feel like you always have to, operate in the market environment as best as you can. And some platforms do so by taking, let's say, the legal route and changing or picking jurisdictions where not accountable to any regulator, or you're trying to adapt into an environment as best as you can. And I feel like that's, for me at least, when I look at Debitum, that's the case. I agree, there is a level of lacking transparency that, would serve as a better tool to assess the risk properly. But, in certain situations, you can only go as far as you can.
You can go quite far with Debitum. I don't know if you read the prospectus, but it's pretty interesting to read like through all the prospectus that they have from loan originators, because then you will very easily determine what's the business behind the platform, right? And it's also interesting to look into the conflict of interest aspect. We have like 7 loan originators right now, and 5 of them are somehow connected to the like network of companies in the forestry business. And even the owner of Debitum network right now, he also is partially owner of Sandbox Funding, right? There's like 5 companies in the forest business, so you have concentration risk to consider as an investor. First of all, forest evaluations is pretty complex and is based on a lot of assumptions. So if that goes sideways or down, all those 5 companies will probably have some sort of issue. So as an investor, you need to be aware of it. And then you have also like the related party risk. Those 5 companies, it's not being disclosed. In which extent they collaborate together, what kind of deals they have between each other. I know that, for example, Sandbox Funding is creditor to Uno Finance, and everything has not been disclosed. And even in those prospectus, you can read that Debitum does the due diligence is limited, and they take a lot of the information as it is. So, it's something that investors need to be aware of. If you do a deep dive, you will find that there are at least one politically exposed person and one ex-politically exposed person in the whole structure of investments. So you have those risks as well to consider. So if investors think that they have like a broadly diversified portfolio on Debitum, it's probably unlikely. Whether the interest rates they are offering are justified for the risk, I don't know. A lot of those forest companies, they rely on refinancing. So it feels to me like if Debitum is not too careful and financing drops off, there may be underlying issues or issues that emerge because there is not going to be a substitute. So it's something to consider. It's probably not just specific to Debitum, but other platforms as well. If a platform raises money just to pay back obligations somewhere else, in my opinion, it's not a sustainable business model, and it's very hard to see for most retail investors whether that's the case on a specific platform.
What's emerging also from our conversation, I feel like the topic of conflict of interest is something very interesting to consider, because I feel like it can be viewed from both ways. You can say like,
Definitely,
look, there's people inside the business, there's people understanding the business, there's people that may take advantage with their project. So it can be a double-edged sword, so to say.
Honestly, to me, it looks like the new management of Debitum, the new era. Debitum is here to basically fund forest and land acquisitions in Latvia. The rest is minor, So you need to look at it from that perspective. Do you want to be part of that? You think it's reasonable for the rates I get? What happens if the funding drops off? Will I get my money back? I don't know, but back then, before the change of management, Debitum was a different concept. Now it's something else again. So, if it's good or bad, a conflict of interest, it's up for debate. Everybody should do their due diligence and research and figure out whether the business model is sustainable like it is, and whether they will get their money back.
I agree.
All right. So let's move to what else is left. Maclear and one-click platforms. So let's try to speed it up because people will be dropping off 1 hour. Nobody wants to listen to us anymore. In terms of Maclear, it was one of the requested platforms to review. Honestly, I have no collaboration with Maclear. I only look at them from the sidelines, and based on my first impression, I would not invest into that kind of platform. Just generally speaking, this is such a high risk environment for retail investors. Unless you are excellent at evaluating SME lending, I would just stay away from it, because most of the platforms in the past failed. So most investors will not have the knowledge or information like suitable data points to be able to evaluate anything.
Yeah, I agree. I have recently updated my Maclear review as well after reviewing some of their projects, which it's something that investors should be concerned about, I would say. As you mentioned, highly unusual to have such decent performance in an environment with corporate loans, different industries, different geographies. Yeah, definitely something that appears to be a bit unusual. I would say if we break it down, jurisdiction, I mean, Maclear isn't the first platform to circumvent regulation by choosing a certain jurisdiction. Can be good, can be bad. I mean, we have seen both truths in the past. I feel like it's quite clear considering their background, the projects that they finance, the shareholders. There's no ties to Switzerland whatsoever. It's a matter of being registered in a non-EU member state to avoid the ECSP crowdfunding regulation. You can like it, you can dislike it. I feel like, certainly it doesn't create any benefit for investors. You look at the financial reports. I find it a bit odd because when you look at the file name and what they published, it seems like the 23 report was created in April 24, but somehow it only found light in a Telegram group in summer of 25, which seems a bit weird. And yeah, I was looking some weeks ago into a couple of their projects. Now, interestingly for me, they have like officially one project that has defaulted now in, I don't know, what is it now, 2 years? The Italian company Vibroidil. And I was looking at and it's just so simple because it's on the project description. Clear was mentioning for 24, they had like a revenue of, I think, around 16, 17 million euro and a net profit of around 150,000 euro. And if you look at official company registers, you see like the revenue is at 6 million and they had a net loss of close to 2 million euro. And I'm wondering, like, is this already, where do those numbers, those conflicting numbers come from when it's like in official Italian registers where you can follow up those numbers? How does Maclear come up with those kind of figures in the project description? And following up, I was reviewing a couple of Estonian projects because the Estonian company register is quite transparent, I would say. You can pull data from wherever you want and get different information. And if you're reviewing like projects from the past and look at the annual reports, you find a lot of false and misleading information, and discrepancies between what is written in annual reports and what is presented on Maclear. I don't want to go into all the details I have pointed out on my blog if people want to read through it. But it's quite scary, I would say, to see how many information are, I would say, misinterpreted and how many information are presented that don't seem very accurate. You see collateral is missing. Sometimes there are no assets in a certain company that doesn't generate any revenue, but somehow the loan gets repaid. Nobody knows how and why.
Questionable. We have seen this before, right? This is not a new concept. I mean, I think this is like this big problem in the industry is that people want to earn the highest yield and they often don't think it through. Or is it really worth the risk? And is the business model sustainable? As from myself, investing in SME businesses, I would probably only consider Capitalia. They're like regulated and somewhat decent, even though the default rate is higher. All the rest is like, I would not touch it personally, but everybody has their own right to do with their money whatever. I'm not following them in any depth, but I've definitely noticed the bots, the spam that Maclear is producing on YouTube, which raises the questions. The allocation of resources into spamming YouTube finance channels is pretty bad, in my opinion. They could have probably allocated it to release their financial report for 2024, which still hasn't been released, or improve their website or whatever. I just think it's such a high risk that most conservative investors should not even touch it.
Yeah, I agree. I mean, I don't think you allow comments on your blog, right?
No, because then it would be like full of platforms doing some fake comments and trying to bashing each other. You have Trustpilot for that, so I mean everybody can comment there if they want to. But yeah, I didn't want to go through the hassle of moderating comments. Also, it would be great to have like investors who invest for several years and have really good knowledge to get like their feedback and input, but they can also leave a comment down below, right? So if you want to share your opinions on anything, you can just drop a comment below and we can discuss it. So yeah, I don't have comments on P2P Employer now.
Well, I wouldn't trust Trustpilot too much either.
No, you should not trust it. But the platform that enables, comments, you can do it somewhere else.
Yeah. No, I see where you're coming from. And I was personally with my blog, I was affected and with, those kind of spam comments from Maclear. And it was quite hilarious. I was, trying to see where they go. And I had it like running for a week or two to see like, what the statements are. And it's quite entertaining because it follows a certain pattern of, I don't know, below every review, yes, good loan availability, but not regulated. Therefore, I trust more SME loans and diversify via Maclear. So it's always like in a similar pattern, in a similar fashion. I also took a screenshot on the blog.
It's very misleading also. So the information in the comments is very highly misleading. So that just decreases the trust of the platform, in my opinion. Okay, let's cover one-click platforms. Investors were interested about our views of Monefit, Bondora Go and Grow. Perhaps you can start because you have quite some exposure there based on your recent portfolio update.
Yeah, thanks for watching, Jakub, and following my channel as well. No, it's true. Go and Grow, I think the history with Go and Grow goes back until, I think 2018, the year they launched the product. Apart from, I think like a 1 year break, 1.5 year break that I had around 23, 24, I have always been exposed to Bondora Go and Grow. Yeah, obviously people, I think that follow my channel, they are aware of also the public criticism that I took on Go and Grow in the past, criticizing the black box character and in parts also the return that is for the peer-to-peer industry and the peer-to-peer environment, not very competitive. As for me personally, I have to say, okay, in parts, Bondora has improved in certain regards, now also disclosing assets under management, for instance. But overall, I think for me personally, for my portfolio growth, I'm standing now at around 200,000 euro. I realized with increasing growth, I always had a big emphasis on liquidity when it comes to my investments in terms of 1 year maturity, 2-year loans, like being the maximum. And I realize I have to split up my personal strategy or my personal approach a bit more in terms of having a portion which, secures you good interest rates for a longer period of time with qualitative lenders that maybe is, where funds are for free, maybe 4 years. But there's also a need for immediate liquidity, which is a topic which we can touch base on later again in our conversation. But to have this immediate liquidity for the expense of lower interest, less transparency, at least for my personal situation, is something that I can justify. And I see like there's an increasing need for me personally to have more short-term assets also in my portfolio, and Bondora Go and Grow as well as Monefit Smartsaver are a good gateway for me to achieve this. Yeah, it's certainly, I would say, an elevated risk that you need to take, that you need to be aware of. But for me personally, it's a calculated risk for me that makes sense for growing my portfolio. So that's why I'm invested.
Yeah, that's a fair evaluation. Still, like from the black box perspective, like both products, Monefit Smartsaver and Bondora are still somewhat a black box, right? Monefit Smartsaver perhaps more. I agree with you, and investors are looking for alternative to savings account, right? If you don't earn anything, having your money on the bank account is not good because the inflation is gonna eat away the value of it. Yeah, obviously that's why investors are looking into those platforms. Go and Grow has been very stable since they launched, right? So I think that's a good track record. It cannot be said about the other products that they used to have before. I think some investors lost money with the portfolio builders and like the older products. So we cannot say that, there is 0% loss for investors. In terms of transparency, I think there's a lot of room for improvement. I watched some of your old videos where you raised this question, and at the end of the day, they decide what they're going to post and publish or not, and investors either accept it or not. I feel like, unfortunately, in the P2P lending industry, many investors accept a lot of things, maybe too much. When it comes to Go and Grow, I know that like you can cash out within like minutes, right? In most of the cases. I think they only had like one hiccup during COVID, maybe, where it was a bit delayed. But other than that, it's been like the liquidity aspect stands even today. So from that perspective, it's interesting. I think a lot of platforms try to copy the strategy of Go and Grow. So worth noting is that they are not regulated, right? The investment product is not regulated, just their lending business. So that's something to consider. But yeah, I can understand why people would invest there. Should something go sideways, you still have the default risk, right? So it's something to be aware of. Although Bondora is at least active in Europe, in the Nordic countries, so I would think that they've been active there for a long time, so I would think that they know what they're doing. But would be good to have more transparency for sure. In terms of Monefit Smartsaver, why do you invest in Monefit Smartsaver? Is it the same reason as Bondora Go and Grow? And do you think, how do you compare those two?
Yeah, it goes pretty much hand in hand, I have to say. The difference the reason I keep both accounts active is Monefit Smartsaver actually allows you to invest with a legal jurisdiction. So that's what I have with Monefit Smartsaver, whereas Go and Grow is only for your private funds. So that's why I have both accounts. Smartsaver helps me in particular also to store some business funds short term before pulling them out. I have to say, with Monefit Smartsaver, the criticism surrounding the repayment behavior of CreditStar is publicly quite known, but with all the rightfully criticism that you and I have probably articulated in the past, we don't need to give them flowers, but we can also acknowledge that, let's say, pending payments have been resolved on Mintos and on different platforms, lender market. Monefit Smartsaver is now 3 years up and running. Let's say it's the first real Bondora Go and Grow alternative that appears to have established itself sustainably. Now, if we think about different products in the past that came and failed, so it seems like Smartsaver has established itself as an alternative for Go and Grow. And so, yeah, we have both products in the market. You can take advantage of both of them if you want, if you have the certain, particular risk tolerance, and if you can judge your expectations properly in the sense that, liquidity can be limited. As you mentioned, rightfully with Bondora, they had a small hiccup then after the pandemic for about 2.5 months with partial withdrawals only possible. But overall, since 2018, they're running very smoothly. Smartsaver is starting to establish itself. Personally, if it's only my personal preference, I like the financial stability of Bondora, the Bondora group a lot more.
Yeah, but you get less interest, right?
Among the best in the industry, yes. I mean, if you look for liquidity, if you ultimately argue for 1.5%, I would rather be exposed than to apparently from the outside looking at safer platform, although there's a risk associated with it, obviously.
Yeah. Monefit Smartsaver, I have some reservations. I followed the lender market story quite well, and it's great for investors that they got their money back and everything, right? But the Monefit Smartsaver was launched when they had these issues with CreditStar, with the payments, right? I had some dialogue with Monefit guys. And I asked them whether they can confirm that money that they raised from Monefit Smartsaver was not used to repay pending payments on lender market on other platforms, and they stopped answering after that. So for me, it's just not a super
Sorry,
sustainable
we have another
way.
meeting.
Pardon?
Sorry, we have another meeting. Was nice seeing you, Jakob.
Yeah. So for me, it's like a sign that maybe it's not such a sustainable business that they run. Yeah. If you have been in the industry enough and you say, okay, it's, I take this risk. Also, it seems like lender market, they were offering 16%, and now it's Smartsaver less. So if they really use those funds, which they can, because it's a black box, so they can use the funds for whatever they want. If they use those funds to refinance old obligations, which were more expensive, just good for them, right? They saved some costs. At the same time, if you have a lending business that create profit through the lending operations, and you need to use other platforms to refinance obligations on the older platforms, it's not a not a great business case in my opinion. So which is my main reservations about them.
Yeah. I mean, Creditstar operates in the European Economic Area, which for me is always, a plus. So you don't get exposed to, currency fluctuations and, those kind of stories. And also like Creditstar, I feel like the issues they have, they're designed by nature. They have quite an aggressive credit issuance policy. They have their credit lines. They have their extensions. They run into liquidity issues. They have bigger bond issuance. So it's a bit by design. So I feel like it's important for investors to take a closer look at the overall picture of Creditstar. I feel like they are in a good position. They have, I think for many years now, good profits in a healthy range. The NPL ratios is always something that could be argued with them. But overall, I feel like they are very established. I feel like also now almost 20 years that Creditstar Group is in the market. They have their position, they are established. I believe they can calculate the risk accordingly. Now there's a bit of bigger appetite. They have cheaper funding now with Monefit Smartsaver, which helps them to decrease the funding cost. Yes, potential liquidity issues may arise at one point, but I also believe they understand the value they have created with Smartsaver, and upholding that promise of liquidity is something that can take them far if they manage to keep it clean and play it honest with investors. And based on that assumption, I feel like there's still a lot of room to grow for the platform and for investors to take advantage of short-term liquidity.
Yeah. Worst case, we will see Monefit Smartsaver version 2 if things go sideways. So we have another platform to raise funds. No, just kidding. Yeah, everybody should decide for themselves based on the information that's available online, whether they invest or not. And yeah, I can understand people wanting to have fast liquidity. There is not a lot of alternatives in the market, so I think the selling proposition here, the liquidity aspect, is really good. And yeah, I mean, it should be noted that, like you said, they can change terms and conditions or restrict liquidity at any time. So this is something that investors should pay attention to. However, you can always manage risk by reducing your exposure into the asset, right? So you can have still your liquid assets on the side and not rely on an unregulated platform for it, which is anyway something I would probably recommend, because with the P2P lending industry, you got to be monitoring what's going on. Otherwise, you might just log into a platform after a year and then decide, oh, I have 90% of my portfolio on default. So yeah.
That's clearly not a passive investment, that's for sure.
No, it's not. Yeah. Okay, let's wrap up with some expectations for 2026, just briefly, because I think most people already dropped off, so maybe it's just the two of us talking now.
You can post it then maybe in the shorts, what we discuss about the outlook.
Yeah, so what do you think? 2026, you have some prognosis or something to pay attention to, perhaps also personally for your own portfolio?
Well, based on the conversations I have with platforms, I believe the topic that we just discussed, which is liquidity, I believe will be the key headline 2026. I mean, publicly, I think it's Peerberry and Income Marketplace that have already communicated the launch of the secondary market. But I know there are several platforms in the market that are actively working on similar one-click solutions, such as Go Grow and Smartsaver. I mean, I have at least 3 now on my list, but I'm not sure if they want me to publicly disclose it, so I will just leave it at that. But it just shows like the narrative in peer-to-peer, or the tendency for liquidity is there. There is a market, and platforms are adapting accordingly, which for me makes total sense. Of course, it will come at the expense of the return expectation and at the end of the day. But I'm quite curious how those platforms are going to position their products, how they will look in the end, the liquidity promise, the return expectation. So I feel like that's going to be an exciting year, and I feel like liquidity is going to be the big headline for next year. Do you have any proposition for next year? What's going to happen?
It's always hard to give some kind of prognosis because we don't control everything. We don't know what's going to happen with the economy, etc. Also, you have a lot of geopolitical aspects to consider. I think for platforms that have been on the market for a long time and they weathered all the challenges and all the issues, they're gonna continue probably to grow. I know that at Peerberry they will increase their assets under management significantly next year, so that's a good news for investors. Yeah, this liquidity aspect I can understand where you're coming from, and I think platforms will attract more funds for this type of product rather than locking them into long-term loans. At the same time, why it has not happened yet is because there's a lot of legalities how to properly build a product that meets the regulators' requirements, and in some jurisdictions this would be illegal. So this is something probably why platforms haven't fully launched these features yet. With Income Marketplace, they have been announcing secondary market for the past 4 years, so we will see if it's going to happen 2026. In terms of general market overview, there's a lot of platforms that we both don't cover in depth, perhaps because we think it's just too high risk. That doesn't mean that other people don't cover them, and you will probably find them somewhere on the internet, raising funds for like 18+%. I think that if everything goes well and people continue investing, they will continue running. However, if there is any event that would slow down the funding speed or just pause the funding and the platforms are not able to acquire new funding, I think we will see a lot of bad things happening to investors. Because I suspect that a lot of platforms are operating mainly because of the funds of the investors. And if those stop, the business model may break down and they will not be able to repay old obligations or refinance their old loans. So this is something to consider in a broader spectrum. And yeah, we have had this situation in 2020, when people stopped depositing funds on certain platforms and then they collapsed. So this is something I can actually see as a risk in the upcoming 1 or 2 years. If something happens, we just need a trigger that will stress test the platform's durability when funds dry out. So yeah, just something to keep in mind.
Yeah, it's a good point that you mentioned, because I also believe we're I don't want to call it overdue, but we're in a market environment that reminds a little bit of the time pre-COVID. Investors are very bullish. They take everything that they find to get their funds invested, and it might be just a little trigger to turn things around for the worse. So yeah, obviously we hope for the best. But what's your prediction ultimately? Do we see a bigger bust in 26?
If there is a large enough trigger, I think so, because the assets under management of those platforms is pretty high. I think it's higher than in 2020. So yeah, there is a huge appetite for taking a lot of risk in the P2P lending industry right now, which is unfortunate. I'm not sure if it's also connected to general investment strategy. Maybe investors think, okay, the stock market is too high. They expect some sort of correction for next year, which is why they might deposit more funds in P2P lending. But you should do your due diligence and monitor the platforms and make as informed decisions as possible and be okay with losing money if you go into high-risk platforms. So yeah, if there is a large enough trigger, I think there's going to be some platforms that will go bust. I hope for the best, but yeah, we'll see.
Not much we can do, but to wait and see how it plans out in 2026.
All right. So yeah, I think we'll wrap up. Yeah, thanks for everybody who is still watching. If you're wondering if this is gonna get a second episode, well, we don't know yet. It just depends on your engagement and on your comments and questions. If you'd like us to talk with me and Denny again in the future, you can leave a comment below. And yeah, thanks for watching. And if you haven't subscribed to Denny's channel, go rethink P2P on YouTube.
Happy New Year. Thank you, Jakob. And maybe we'll cover the remaining questions in a second video then. Let's see.